a good swing in US crude. It has achieved the support at 76. We had told you that long time back we had expected that 76 will provide a support, and yes, it has achieved these levels. At the same time, 82, 83 again proven out to be a good resistance. Ended the week in a doji. Now new month, new candle, new contracts. What can be expected out of US crude? Whether it has seen the bottom or it has still got some room for it to drop further? What can be expected in the month of October, the next week? And those who are looking forward to, many of you asked this question, what can be expected out of December contracts, which position you should take? We will see with the help of charts and indicators. Missing on to subscribe this channel is missing on the profits. Do not commit this mistake. Do like, share, subscribe and comment. Press the bell icon because that will keep you updated with the latest updates. I upload my daily analysis on US crude very early in the day, along with natural gas analysis also with the Asia session. So do watch that. Definitely it will help you become a profitable trader and it will help you decide the direction for the day. So do watch that also. Now let's start. First we'll look into charts followed with indicators, and towards the end I will give you the trading levels and the strategy for next week. Now on the weekly charts you can see here that oil has seen such swings after this rally and breakout from the $40 levels. Since then it is trying to give you higher lows, and barring this exception it is trading this in ascending and increasing triangle, which is a bullish indication that it is trying to trade in this bullish zone. Higher lows are seen, but at the same time one must not forget that the bottom is far away. If you look at this, the channel bottom is at around $70 levels, which may prove out to be a very strong support zone for US crude. And if it fails below 70, certainly there is lot much of scope, lot much of room for it to drop on the downside. But for now, $70 levels is certainly going to be a good support, which is still, and the answer to whether it has bottomed, I think so that yes, still it has some room for it to drop and it has not yet bottomed. So be cautious with that. Now before we proceed, and also look at the weekly charts out there. Now the $90 levels and 85, this is going to be certainly a very strong resistance zone which it has to surpass in order to remain bullish. Look at these two candles on the weekly charts, higher lows, lower highs, and then this breakout. After this breakout, now the previous candle was a doji candle. So yes, it is still looking downwards and it is looking forward to a vertical drop. And if you look at, yes, it has achieved the lows out there, and possibly next week when you see it trading below 79 levels, certainly you can expect that it is looking forward to another red candle. Then you can expect 78, definitely a good support, and below that we will be looking forward to 75 levels on US crude itself. At the same time, one must be observant and watchful of how it behaves at around 81 and 82 levels. If it breaks past this zone, certainly you can expect a little more bullish move. But remember, previously also, now also, this is going to be a very strong resistance zone for US crude. For it to sustain, surpass, if it trades above 95 and 100, certainly it is looking forward to another round of rally. Else, now if you see, the previous rally also started from $70 to $90. Now at least it is looking forward for it to achieve these levels, which will also be higher lows. Achieving these levels, yes, that is a time when you can expect that it may try to retrace, and then again 85 will come into picture. This is going to be a stronger resistance while for looking for any upward or bullish move. But this is just on the weekly charts. Let's have a look at the daily candles. On the daily charts, see, this was the bearish move. Since then the slope of the bearishness and the volatility both have changed in US crude, and now it is trading in a much lesser degree of bearishness. And yes, you can see now if you look at the higher or the candles which it has formed, higher lows were seen and then higher highs. So in near term we have seen that it in last 3-4 days it is traded little bit bullish and it has achieved the highs out there. At the same time, if you look at the long term charts, yes, it is still trading very much in the bearish channel. The highs of this channel are now at around 70, 84, 85 levels. So yes, only and only if it trades above 85, consider that for a little bullish momentum, then you can expect 88, 80, 90, 88 and 90 levels, and then 95, 98 levels. But at the same time, till the time it trades below 85, certainly it will call for a little more bearishness. Now look at the last three charts, lower highs and higher lows, indicating it is trying to consolidate, and hence 77 levels should be a very strong support below which you can expect a further drop. So yes, sell at 79 levels next week and probably expect 78, 77. These are the two levels which where it may get a stronger support, and below that I will be looking forward to 75 levels, and below that you can expect a sharper drop. So it is reversing possibly after this retracement, and at the same time see lower highs here, lower lows here. If it breaks past this zone at 82, certainly it will call for another round of green candle which will take it till towards 85. So you have to be cautious and alert of that. So beyond 82, certainly it is a good buy. Below 79, certainly you can sell there. But this is just applicable for next week. Already we have seen that the bottom is far away. So this answer is also cautioned that $70 levels for those who are looking forward to buy for December contract. You have to wait for $70 levels. Till then you can remain short rather, and then you can expect that we may see $70 levels, and from there a bounce back can be expected. Now look at the 4-hour chart. On the 4-hour charts, it has consolidated here 82 levels, provided it a stronger resistance, then two candles, higher lows, lower highs, and then you can find out it is trying to give you a breakout, and that is why I say below 79 certainly you can remain short. 78, 77, and then 75 levels, lower lows will be seen there. I'll be looking forward for it to achieve at least 74 levels before it tries to bounce back a little, and then our near term target still towards 70 can be expected. So for next 2 to 3 weeks you have to stay alert. Yes, it can try to drop further. Any move above 82 will negate the theory, will negate the expectation that it will drop above 82. Certainly it is looking forward to 85, 86, which is a very strong resistance zone. And remember, we have seen already 85, 95. In fact, till 100 there are a consolidation zone, there are multiple resistance levels, and hence you have to be cautious. It can reverse any point of time. Even if it rises, it can reverse any point of time and can give you a sharper drop. So this is another set of expectation there. And yes, you can remain short and expect 79, 76 level to provide a support. Below that further a sharper drop can be expected. So we have seen 4-hour, daily, weekly charts, couple of questions answered regarding the future observations, December contracts, the lows, the bottom. We have answered this. Now what can be expected in the next month, which contract you can look forward to. Let's have a look on the monthly candle. On the monthly charts, if you create a vertical line and if you see it has symmetrically, see what it has achieved in last 5 months. It has covered the complete journey in just 4 candles. This was the 4th straight red candle, and if you think that this is the last one, we have to be cautious. Also remember, see this time it has achieved higher lows. It failed to go past the lows of this previous candle, indicates that there is a possibility for it to bounce back, but do not consider anything for a reversal till the time it trades below 85. That is very. Now another observation that the body size is increasing here. Look at the month of August and this is the month of September. The body size is increasing, indicates increasing bearishness. Also look at the tail out there. There is a tail left. Hence if it tries to drop, certainly it may look forward to 75, 70, which is a good support. And then on the downside, do not think that this is just the end. Yes, $70 levels will be a good support. However, yes, this is the zone at $60 levels which it may try to achieve there before it looks forward to any further bounce back. So yes, on the downside, still there is a scope. Breaking below 70, certainly more bears will come into scene and they will enjoy the party, take it further down till towards $60 level. This zone is very very important, between 60 to 70. It can try to achieve and attempt and achieve these levels somewhere in between 60 to 70 before it looks forward to a reversal there. Now look at the monthly charts. Also on the monthly charts you will find, you can see this was the zone which was the previous highs way back into 2010 to 2015. It has traded consistently in bullish zone, and then a sharp drop has been seen in 2015 which has almost brought it back to $50 levels. It consolidated here, tried to achieve a high, then a sharp drop, and then higher highs are done, and now probably it is looking forward to this zone. Probably $60 levels, $50 levels in the near future, maybe few months can be expected. Let's see how it behaves at $70 levels. If it drops below 70, certainly you can expect a further sharper drop. Be careful till $60 level. 60 and 70 are going to be a very very strong support zone for US crude. So for those who think that it has bottomed, yet Yet again it is confirmed that no, that is not the case. It is still some room for it to drop further. On the other side, yes, you can buy at 85 and remain long and expect it to remain bullish above 85 for 90, 95, 98 levels, and beyond 100 it will fly high. So be cautious till 85. Yes, for the next week you can buy at 82 and sell at 79. That is a very much clear picture. But let's have a look with the help of our indicators, whether the indicators also speaking out the same what we had seen or they have a different observation. Now look at the 4-hour charts here. It is trading at the median there of the Bollinger Bands. It is trading below the 20, 50, 100 moving average, indicating little bearishness. Yes, below 79. That should be a good level to sell there. The directional movement is bearish. The stochastic is looking downwards and enter into oversold zone. The MACD has crossed over, and this is again, it was trading above zero level, above in the you can say positive side of it. Now it is again willing to cross over for a sell, and this time it may crash heavily if it continues to trade on the downside. But this is just on the 4-hour charts. The RSI2 is at comfortable levels, so you can expect that it can still take a direction any which ways. Now look at the daily chart. This is the most important chart, and you can find out since last few weeks. You can see since July beginning it is trading below this 20 period moving average, which is proving out to be a stronger resistance. Only one breakout we had seen, and now again it is getting the resistance precisely from the same levels. Yes, it is situated at around 83 right now, and only if it breaks beyond 83, 82 zone, certainly you can expect little more bullishness for 85, 86, and beyond that it will fly high. The directional movement again diverging, it is bearish, indicating more bearishness. Stochastic was at bottom, trying to bounce back. The MACD is willing to converge crossover for a bullish move. However, right now it is bearish, and the RSI is looking downwards, indicating little more bearishness. On the weekly chart, similar is the observation. It is standing here at the bottom of the Bollinger Bands. It is standing here at the 100 weeks average almost, that is close to 2 years. Bottom is somewhere here at around 79 in 80 levels. On the upside, yes, there are resistances here at 90 and $100. If so, in between this zone, that is 80 to 100, it may try to still show you a little more swing. Look at the directional movement. This is diverging, indicating coming more bearishness in the coming weeks. Stochastic entering into oversold zone. We have seen it entering into oversold zone, then a sharp bounce back. When it is bullish, it just attempts to achieve these lows and tries to bounce back. And on the weekly charts, this is a rare phenomena, and it happens rarely. Yes, it has still probability for it to take it further down before it tries to bounce back. The MACD on the weekly charts is now trading below the zero levels. It has come back on the negative side. Yes, this is a sharp drop. It can try to possibly stay below these levels before it tries to bounce back. Hence, little more bearishness can be expected. The RSI is almost looking downwards here. And if you look at the monthly candle, on the monthly charts, 20 months average, it is already breached, and now it is trading bearish. The support zone at 70 and 60 is very strong. We can see it at those levels in near future. Be careful. The directional movement is bullish, trying to converge here on the monthly candle. That is another observation. The stochastic entering into oversold zone, and see in 2020 once we had seen, then 2019, and then 2015. So rare phenomena for crude oil to trade oversold, but if it can trade overbought for a month, it can trade oversold for a little while too. I don't find that there is a harm in that. The MACD has crossed over, and this is a sell crossover. This is a bearish crossover. Once it crosses in bearish, it may sustain little more bearishness for a little while. You can see this was the previous crossover, and you can see after that sharp red candles consolidation, and then it traded bearish almost. We had seen close to 20 to 30% correction there. Now if you consider now a crossover at around $80 levels, almost $20 here from, will make it at around 64 $60 levels, which is going to be a perfectly strong support, and this possibility exists as well. Hence you have to be cautious as the MACD is crossing over. The RSI is looking vertically downwards. It can try to attempt and achieve oversold zone soon. So we have seen the charts, we have seen the indicators. Now it is the time to give you the verdict for next week and for next month, and the levels which I provide, definitely if you trade as per the levels, you will be remaining profitable. So let's look at the First, let's look at the two key numbers, that is 82 and 79. These two numbers are the key numbers which you should watch out for. Beyond this, I will give you the levels just and we'll decide the strategy. And before I proceed, yes, if you want to join the mentorship course where you can learn the art and strategy of reading the charts, carefully understanding the right entries, the right exits, and the profitable trades. If you want to pick those strategies, you can join my mentorship batch. The 15th batch is starting soon, 90 minutes daily live webinars, and a lifetime technical support is available with you for you to become a profitable trader. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Also, you can be part of my signals group or else just become a patron and support the effort. All the links for my Telegram channel, my Telegram ID, my Gmail ID, and my patron page are mentioned in the channel and video description. Do support at least by becoming a patron out there. So yes, beyond 82 you can remain bullish on US crude and expect 82.4, 83.5 and 84. Remember, this is the next milestone which we are looking at, and then it will directly land to 85 and 86. This is the next stronger resistance zone. Be careful of this. 85, 86 certainly is going to be a stronger resistance. Beyond 86, just it will fly for $90 levels. And on the upside, be careful of 90. If it trades beyond 90, certainly it will call for very strong bullish move. So in between, 87.5 is also going to provide a little support, and then 89.2 levels. So in sum, stay long above 82, then you can expect 84, 85, 86. This is going to be very strong support zone. Sustaining above 86, we can expect it to fly for close to 90 and plus levels. On the downside, sell at 79, 78.1, 77.2, 76.1 levels, and then you can expect that we are looking forward to 75 and 74. If it breaks below 74, certainly $70.2 levels can be expected and can be seen in the near future, maybe this week, maybe next week, or in couple of weeks. But these levels are going to be a very strong support. Any bounce back from here should be cautioned. Yes, you can buy at those levels. This is going to be a good support. As if it gets a support from this, we can see a good rise also. Now, since it is closed at 79.4, 79 on the sell side appears to be a good entry, and you can remain short below 79. At the same time, on the upside, yes, we still have some room for it to rise till 82. Those who want to risk a little can buy it here at 80.2, then expect 81 and then 82 levels. Only safe buy entries though above 82. Yes, still you can capture the move out there for a couple of dollars by buying at 80.2. So take your trades accordingly. Trade with the stop loss, trade with the trailing stop loss. Do not forget to like, share, subscribe and comment. Thank you very much. Have a great profitable trading week ahead.